As always, man. I'm the first one in, the last one out, man. Just cleaning up here in the studio. Actually, I lie. I'm the last one in typically, and the last one out. I got a great team here. They're actually helping, but they do good work. So, hey, I just want to bring this up real quick. I'm actually not even sure where the camera is on this thing. There it is. I get a lot of questions about the dividend yield. A lot of people are saying the dividend yield in the S&P, I mean, it's just going to be crushed, go nowhere. It's going to be a disaster and hurt for retirees. But let's think about it for a second. Let's take the emotion out of it and just think for a second how this works. So the dividend yield on the S&P 500 is currently about 4 times that of treasuries, right? So if you take a look at it, obviously, you're 4 times more to be in the market than to be in something safe like treasuries. That's really incredible because people that don't have to take a lot of risk are being forced to take more risk. However, I think it's a lot different this time as far as the overall dividend yield. I think it's a lot safer. So if you're thinking this is something that's going to be a disaster, let's think about it. If you looked at 2008, in 2008, the dividend yield obviously was crushed, but it's because financials led the way. So financials were the biggest contributor to dividends. So if you were to break that down and look at each sector and see what was the biggest contributor in terms of dividends, that would be the financials. Now, because it was a financially driven disaster last time, you have a good reason to say, okay, in 2008, everything was driven by the financials as far as the downturn is considered, and the Fed was making other banks buy other banks. They didn't want to buy the other banks. They had to cut their dividends because they were being given a lot of money. And so back then, if you're familiar with that whole chaos then, that was part of the reason why the dividends fell so much in terms of the S&P in general. This time, it's a little bit different. So this time, and I don't know why I'm recording this with the camera this time. I just thought, I was walking around, I thought about it. I got the question probably no short of 100, maybe 200 times, to be perfectly honest with you. But this time it's a little bit different because the biggest contributors to the dividends overall are tech and financials. They have less earnings risk overall relative compared to the S&P. And so what's happening this time is you're noticing the dividend yield actually holding up as a broad-based measure, looking over the S&P 500. If you were to look at the tech sector, they have more cash than debt. It's been an interesting study that's come up lately that a lot of tech companies could pay off their debt in less than a year if they had to pay off all of their debt because they just don't have a lot of debt, and a lot of tech companies have more cash than debt. I know I give them a hard time sometimes, like the smaller tech companies, the newer guys, the unicorns out there that have really no profit and they've taken on a bunch of investment. But in this case, your large cap, your mega cap tech names, they really have no debt. They're just all cash. And so the biggest contributor of dividends to the S&P comes from financials, and it comes from tech. Well, you have the Fed out there saying they're not going to require financials to actually cut their dividends or eliminate their dividends because, well, they're not impacted. This is not part of their blame that the economy is doing what it's doing. So, I mean, sure, there's some sectors out there that are going to be in more trouble than others, but in general, you have a whole dividend yield. If you're an index-based investor or you're somebody that's like, I'm really concerned about what's happening here, you basically have no immediate reason to say that the S&P 500 dividend yield is just going to be demolished or somehow beat to death there. So just bringing that up, I kind of got tired of emailing the same thing over and over again. And I was just cleaning up here at the end of the day, and I thought, well, maybe I'll share that with you. I don't know if it's interesting, if it's something you want to continue talking about. Maybe we can expand on that a little bit, but let me know what you think. Just thought I'd share something different with you, and it was on my mind, so I appreciate you guys watching. I hope you have a great rest of your evening, and hope that jazz music wasn't too loud in the background. All right, enjoy. We'll see you.